Hello everyone, welcome to the Ichimoku.co chart of the day for the trading day ending Monday, March 6th. Today looking at the S&P 500 on the daily chart, and importantly today we have seen the market trading to the downside, continuing the trend, a lower high, lower low for today's trading, and an important close down below the Tenkan-sen indicator. We haven't seen the market closing down below the Tenkan-sen for some time, probably about a month or so, and this could be significant. It could herald an important change of sentiment. Now, what is going to be more important will be how the market follows through for the next day. This trading today has not been totally bearish, although we have traded down through that Tenkan-sen and down through the previous low in a major way, suggesting we have some eagerness from the sellers. But what we saw was the sellers losing commitment, as evidenced by this larger shadow on the bottom, and the market closing up between the midpoint level and the high. And that suggests that the buyers have closed with a moderate amount of control, and does raise doubt about whether we will see the trend continue to the downside. We've also seen a reduction in the size of the body here. Now, previously we had this larger black body candle suggesting some net selling in the market between the open and the close. Then a smallish white body, which suggested there was an opportunity for the buyers, but they didn't follow through. And now no body here, which suggests that neither side, neither the buyers nor the sellers, have made any net progress. That's significant, where we want to see the sellers making net progress as a trend moves to the downside, especially in the early stages, and we haven't seen that. And this therefore suggests that there is an opportunity for a change of trend. Now, having said that, there is potentially some strong resistance around this Tenkan-sen indicator, and we've seen that today, where the market just tested above there and was able to close above there. So that will be an important benchmark moving forward, and it trades at 2376.93, so 2377. So just monitor how the market reacts around that area. With this being a doji candle, that's a candle where we have the open and the close around the same level, and a doji candle is one of those candles where there is no net momentum. It does suggest that there is potential for that change of trend, and because we're in a downtrend, it raises doubt about the ability of the sellers to trade to these lower levels and maintain price activity down at these lower levels. Now, having said that, if we do see the market continue trading down, then this window that was opened about 4 trading periods ago may come into play, and we have seen it come into play today. The market has tested just to the bottom of the window. We've failed to trade through there and failed to close through there, so that is also going to be an important benchmark for the downside. The bottom of the window is around this 2368 level, so just monitoring how the market reacts around this area. If we do trade through there, looking to further support in another window that was down around 2351, and another down below the Kijun-sen indicator. Now, just placing our Fibonacci extension tool on the market here today, and just get a bit of a closer look here. And what we're examining here is the relationship of the current first time frame downtrend to the immediate previous first time frame downtrend. And even though that was just a 1 period candle to the downside, and then the buyers rushed into the market significantly, it does suggest that there is a potential for a change of trend back to the upside, with the market interacting with the 261.8% level. And with there being some decent price rejection from there, the sellers failing to close with control and losing commitment, we will be monitoring for a potential high and high low from here, but also bearing in mind this potential overhead resistance at the Tenkan-sen indicator. Now, just looking at the bands here, and importantly, the market has been trading within the bands, and it does suggest that that strong bullish tone that we saw in the medium-term time frame may no longer be in the market. Closing with them in the bands has occurred now for the first time since early February, and it may be significant, and there is a possibility of the market testing back towards the mean, which is around that middle of the bands at 2347. Importantly, as we saw the Tenkan-sen holding as resistance today, also the upper band holding as resistance, whereas it was previous support. So this could herald an important change of sentiment in the market. So just monitoring very carefully for the next day's trading how the market reacts around the top of the bands, which at the moment is at 2347. 2378. And if we do see that area holding, the market just be rejected to the downside from there for the next day's trading and closing within the bands again, we could see the start of this retracement, which would actually probably be quite healthy for this market. The bands started to become a little wide. We did see some extreme trading around here at these highs around the 2400 level, which did look a bit extreme, and the market certainly was overdue for a minor pullback, and that's what we're seeing. Now, bearing in mind also our analysis here of this current candle, that there are certainly a lack of any distinguishing bearish features in it. So there is an opportunity here for the buyers, and just monitoring how the market reacts to this upper band if we do bounce off there.